If you want to trade like a rebel, you got to come to Rebelcon 2022. It's going to be in Dallas, Texas, at the fabulous Four Seasons Resort. It will be more fun and more live trading than we've ever done before. That's why it's called Rebelcon 2022. We're going to have barbecues and double the amount of live trading. The guest speakers, as soon as we announce those, this thing's going to be sold out, limited to 250 people. Sign up now for Rebelcon 2022 at the Four Seasons in Dallas, Texas.
Welcome to the Rebellion.
Bang. Welcome back, folks. It is Monday, the 22nd of August. He's Pete Najarian. I'm John Najarian, and we're bringing you the Rebel Edge. I'm out at the airport because what else is new? Pete's in an undisclosed location somewhere.
My home. I'm in my home.
we keep the address in a mayonnaise jar on Funkin' Wagnall's porch, just like Johnny Carson, Pete.
God, I love Johnny Carson.
You
That
remember?
guy, he was a true late night guy. These guys now, I tell you, I feel bad if I'm offending anybody, but they're the worst. They are the worst. Johnny Carson was a true entertainer, and it was just amazing what he did, John. It was so much fun. Oh,
Yep.
missed it.
You remember? He used to put the Karnak stuff, Pete, in a mayonnaise jar on Funkin' Wagnall's porch. And why Funkin' Wagnall? I don't know. Pete, sis, boom, bah.
Boom, bah. What is the sound when a moose explodes?
No, when a sheep.
A sheep. This boom, bah.
All right. But they didn't tune in for comedy, Pete. They tuned in for...
They didn't get any anyway.
No. Johnny Carson's turning over in his grave right now. So AMC, Pete, going ape. And this is something that seems an awful lot, Pete, like almost like a Bitcoin or a digital asset, because they created a preferred stock called APE, A-P-E. So they have that on this hand, and they've got AMC on the other. And basically, when you look at the one down 40% at one point today, and you see the other up 20%, you kind of got to merge them together, because everybody who got a share of APE can convert it into AMC. So it's like a weird deal.
It is a weird deal. It's tough to figure out. I mean, you're an absolute excellent guy who understands all the most craziest things that happen in the markets, John. And it's confusing as hell. I mean, to try to figure this whole thing out is absolutely crazy, but that is the world of the meme stocks, right? I mean, and we talk about this all the time, but you get that high short interest, you're getting these ungodly moves to the upside and to the downside, and you better be disciplined. And we talk about it all the time. You get gains, you need to figure out where you're going to take these off. You get losses, you also have to figure out where you're going to take that off. And when you look at the leverage that these guys have got, we're talking about somebody, when you look at what they've got as far as cash and what they've got as far as debit, John, debt right now, it's $9 billion. That sells a little something on why this thing is just moving all over the place every single day.
Yep. And not everybody's gone back to the theaters either, Pete.
No.
So they've also got a competitor, Cinemark, that owns the Regal chain that is, in all likelihood, tapioca. That doesn't mean they go away, though, but it might mean that they have to do a little reorg to stay alive.
Yeah. For sure.
Looking around at other topics, Pete, what about Tina? As in there is no alternative. Forever, people on CNBC have been saying, oh, Tina, there is no alternative because you're getting zero in the bank. And meanwhile, you were getting, 2% or so on a yield for the S&P. That yield has dropped.
Yep.
And meanwhile, the 10-year is back up to 3%. So there is an alternative now, Pete.
Yep. I think I shocked a lot of the guys on the panel long ago, John, because I haven't been on there for a while, neither of you, but sitting there and saying, hey, look, keep an eye on the 10-year. You get over 3, people start looking at that and saying, you know what? That's attractive. And that's exactly what we're seeing happen once again, because we started getting very close to 3. We got up to 3. You can see the markets. Just look at last Friday, look at what's going on today, and you can see a lot of selling in a lot of different areas of the marketplace. And meanwhile, you're looking at the 10-year holding up there at a 3%. I mean, it's pretty obvious where people have decided to shift. And I think that 3% level, John, and it's either side of that. It could be 298, whatever. I mean, let's not be sticklers about it, but that certainly is a level where it changes where people want to put their money. There's no doubt.
Yep. And I saw, Pete, that they were saying that it's down now. The yield on the S&P is down under 1.6%.
Right.
So, literally you're looking at double that for something that, the government has to fail for you not to get paid on your 3% 10-year sort of thing.
Yeah.
What about this other one, Pete? Now, Teledoc, we've all known and seen what a zoom it had and then how it fell apart. Zoom had a zoom as well. But
it did.
This isn't just like, let me talk to a doctor, from my home. This is, Signify Health and whether or not Amazon and these guys are after them, because to the extent that they are, that's a big deal.
Yeah. Well, and it is a big deal, John, and people are all interested on is there somebody out there maybe is there bidders out there? We know Amazon potentially is one. Look at the volume, and that tells you a lot, because I've listened to Bob Pisani talk about the lack of volume that we've seen in the stock market itself, John. Well, that ain't happening, by the way, in the derivatives market at all. In the derivatives markets, we're on fire. We're averaging well over 40 million contracts a day, 46 million this past Friday. So it gives you an idea. Things are going very, very well where you've got leverage and where you can put that on. But today you are seeing some huge volumes there. First 2 hours of the day in this particular stock, John, we're looking at 6 times normal. I think it was 12 million shares just in the first couple of hours. They continue to add to that. So it's interesting, and they are doing a lot more than Teledoc. I mean, this is a little bit further down the line. You're getting actually people going out and visiting these health professionals, go out and do that. That does change things just a little, for sure.
Yeah. And speaking of changing, Pete, and this just keeps changing for the worst. And it is the natural gas contracts in Europe spiked another 20% today. Can you imagine, Pete, if we were paying what Europe pays for nat gas? There would be riots in the street. There still might be this year because, energy is going to be very dear. You've heard us talk about it. You've heard us talk about CCJ, even the uranium plays like Camco and so forth. But man, natural gas, Pete, at the European hub, because we have the Henry hub here in the United States, but in the European hub was up 19% today. And it is not going down anytime soon.
Well, and John, what's funny is that is one thing about a lot of the guys on the talking heads on television. They talk about oil. It's pretty easy to talk about, but they never talk about natural gas. They just don't. And it doesn't happen. They should be talking about it here as well, John. And that's something that you and I have focused on a lot. I've done a lot of that on the Take in the mornings for many, many months now, because it is important. It's another element. We're talking about energy here, and you take a look at what's going on with nat gas here. We today hit a new high, the highest level since 2008, John, today. Gives you a little bit of an idea of the kind of run that we've had in natural gas. We had that pullback. We ran before. We did pull back, and we are zooming once again. We got almost back up towards $10. So it gives you a little bit of an idea that this is not just an issue across the pond. It's an issue here as well. Now, we're not at their levels, but we certainly are starting to see that go higher and higher and higher. And it got all the way up to $13 back in 2008. I'm not sure where it's going to go now, but it certainly could test those levels, John.
That's my target, in fact, Pete, that we're going to test that into November for sure, I believe. And maybe we will get those riots. I hope not, but we certainly could, Pete, because it's not just running your car, it's running your house, and it's businesses running their business. All right, Pete, let me hit some unusual option activity, or UOA. What about this one? The banking index. This is the regional banking index, folks, is KRE. So this one has a lot of the regional banks. So you don't have JP Morgan and Citigroup in this one. You have the regional banks. And they're buying a lot of puts in here. Basically, that ETF, exchange traded fund, was trading at 66.5, Pete, and they were buying big time the 64 puts. So in other words, they're saying, $1.50 drop pretty quick, because these are September 30th. That's when these options expire. So if you're a stock trader, you'd either want to A, be out of that based on this, or B, you'd want to be short. Now, Pete and I aren't going to recommend short positions, but I will buy short positions through puts.
Yeah.
Because if you're a derivative trader, you can define your risk, could be that much risk to the downside, and yet you get all of that run to the downside.
Yep. And I'm going to hit a different one, John, but I'm in the healthcare world. So getting outside, away from the banks, away from energy and all the rest of that. Clover Health. Now, this one's got a lot of reasons why it's pretty interesting. It's a stock that's been absolutely hammered to the downside. Chamath has a very substantial position in here, John. I'm not even going to try his last name because I'll butcher it, but Patatia, whatever the hell it is. We all know. Yeah, but he's got 10% stake or more in that stock, but his levels are way up closer towards 6. I think it's right around 575, something like that. Stock today is trading about $3, John. It's Medicare Advantage insurer. That's what they do, and Clover Health. But 22,800, John, of the August that expire Friday, 3 calls. That's right where the stock was trading. It was trading right around $3. They're buying the 3 calls. It gives you leverage. For people who don't understand the options world, this gives you the leverage to be able to buy those calls at 7 cents up to about 19 cents. That's what they did with the stock trading right around 3. If the stock can make any kind of a substantial move to the upside, those things will start to move very, very rapidly. And that's what you kind of got to know. If you don't understand the derivatives market, the options world, you do want to get educated in there before you jump in there. But this one's not totally complicated, and a little bit of a reduced risk to it in terms of, you know what you're paying, you know what you can lose. And if this stock can make a move to the upside, you can have some pretty big gains as well.
Pete, speaking of big gains, good teaser there.
Yes, it is.
What about this Big Ten deal? I remember back in the day, Pete, when you could get CBS could basically bribe Notre Dame, for instance, here in Chicagoland area, and say, hey, $200,000 if you'll move the game from 3 o'clock to 6 o'clock, because we want to get a bigger audience for the nighttime show or whatever.
Yep.
You're not getting these guys, Big Ten or SEC games, for anywhere near that kind of money now. They just signed a $7 billion 7-year deal, Pete. That's NFL money.
It's maybe even better than NFL money. And as a matter of fact, John, it's actually potentially could get all the way to about $8 billion when it's all said and done in this contract, which means when you bring in USC and UCLA into the Big Ten, John, and you've already got, now this is the best part. You've got Fox at noon, their high noon show, as they like to call it. And then you've got CBS at 3:30. And then, oh, by the way, you get to go to NBC and be right there in front of everybody for the evening. This is unbelievable what these guys are able to do, John. And I'll tell you, $1.2 billion annually is what they're going to be getting. So when you split that all up and you're getting $75 million each to each university just from this contract, that is saying a lot. I mean, this is a monster. I'll tell you, Sean McManus from CBS, he actually lived in my old town when I lived back in Connecticut. Great guy. We also had the CEO of ESPN there as well. And I'll tell you, these guys, if you'd have asked them 10 years ago, what do you think the numbers are going to look like? I guarantee they wouldn't have thought they'd look anything like they're looking, John, because these are some absolute monster numbers. But that's what football's all about, except for when you go, and I'm going to segue into the next one, John.
All right.
Now,
You should.
Except when you go to preseason. Is that the most boring, worst thing you could ever imagine? I was there Saturday night, John. I'm at the Vikings game with the Niners. I'm lucky enough to get a sideline pass, and I'm still bored out of my mind. The Vikings had 27 players who did not dress for the game. I mean, what are we doing? We're throwing out a bunch of ragtag guys. The guys are not getting any time. I understand you don't want your quarterback to get hurt. You don't want Trey Lance to go down in the preseason. But John, they make you buy the preseason package when you buy your season tickets. That also means you got to park $60 to park it at our stadium over there. And then you go in, and of course, everything is a very expensive number. So the whole thing is just a real royal pain in the rear end. I mean, it's a lot of money. It's a big pain in the butt. And it's something where, how do we get this fixed? How do we give people the opportunity to go to games that want to go to games, maybe at a discount? Maybe what they should do is say, hey, look, preseason games, they're only half price. We're going to make you buy them, but they're only half price. And then people can have the option to do what they want to do. And then, of course, if people have the means, they can afford maybe to buy the ticket at half price as well. And then you can get people who don't normally get the opportunity to go to stadiums to get in there and go to the stadium. But I'll tell you, John, it is frustrating that when you get there that you just see basically about a half-filled stadium and a lot of people who don't want to really be there. They're bored, just like I was bored. They've got to answer those questions. In the NFL, as much money as they've got to fix this. This is a problem, I think, still. How's your mic? Is your mic okay or no?
You tell me. Are you hearing me okay, Pete?
You're good.
All
You're
right.
good.
Well, had a little bit of an issue there, folks. Could be weather related. I don't know. But we all appreciate you guys tuning in. I hope you enjoyed the show, and please tell a friend. We're going to be hopefully expanding the program in the fall, Pete.
Yep.
And we certainly appreciate all the feedback for the Rebel Edge. So make sure you guys do reach out to us, ask us questions, and give us some feedback. We appreciate it. We'll be back tomorrow at 1 p.m. Eastern time. See you then, Pete.
Rebel's Edge, baby.
Bang.